Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Global markets remained volatile over the past week as financial sector worries impacted risk sentiments. The sudden collapse of two US banks, among the top three biggest bank failures in the US history, and liquidity concerns with a major European lender triggered a widespread sell-off in financial markets. However, sentiments improved later in the week after US and Swiss regulators, along with major US banks, announced measures to inject liquidity into the troubled lenders and protect bank depositors. Gold rallied over 6% over the past week, and US bond yields fell sharply amid a surge in demand for safe haven assets and a repricing of global central bank future monetary policy actions. Despite the large swings, major global equity indices managed to post weekly gains, with the MSCI Asia ex-Japan index up 0.9% and the S&P 500 index up 1.4%. Back home, Indian equities started on a weaker note and continued trending lower for the first three trading sessions amid weak global sentiments and foreign investor selling pressures. The Nifty index declined 1.8% for the week and underperformed global peers. Broader markets underperformed Nifty this week, with the Nifty Midcap Index down 2%, while the Small Cap Index was down 2.5% for the week. Among sectors, telecom, auto and banks were the worst performing sectors with cuts of over 3%, while pharma and utilities were the best performing sectors with gains of over 0.7%. The Indian fixed income market had a decent week as bond yields fell across maturities, supported by a sharp fall in US bond yields. Yields at the shorter end fell sharper than longer end amid repricing of lower terminal policy rate expectations. For the week, the 10-year Indian government bond yields fell by 7 basis points to 7.35%, while the 3-year and 5-year Indian government bond yields fell by 18 basis points and 14 basis points respectively. The INR depreciated against the USD last week amid foreign investor outflows. For the week, the INR fell 0.4% to close at 82.5 per dollar. Over the coming week, all eyes will be on the US Fed policy meeting. Market expectations of further policy actions have narrowed significantly compared to the previous week. We now see a 60% probability of a 25 basis points rate hike on the 22nd March and a 25% chance that the Fed may pause. This compares with the market expectations of a 50 basis points Fed rate hike just last week after the Fed Chair Powell's testimony to the Congress. However, a hawkish policy guidance could keep markets volatile over the coming week. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.